Freight rates are up, but so are bankruptcies. Why is this? That's the puzzle. Freight rates are finally moving up. Diesel prices have finally started coming down. If you have been into trucking for any length of time, you'd probably think the worst is finally behind us. So here's the question. Why are trucking companies still going bankrupt? That doesn't make sense, not to me at least. When freight rates improve, trucking companies are supposed to get healthier. Instead, month after month, more carriers are shutting their doors. Big companies, small companies, owner-operators, family businesses, they're disappearing from every corner of the country. Why? So what's going on? What do they know that everybody else seems to be missing? The answer didn't start this year. It didn't even start last year. It started several years ago when trucking was booming. Remember back then? And decisions made back then are still costing companies today. By the end of this video, you'll understand why higher freight rates alone aren't enough to save trucking companies, and why every truck driver should be paying attention. Remember this, the bill always comes due. Let's start with what we're seeing today. This isn't just one company having a bad month. This isn't one bad business decision. This is happening all across the country. Over the past several months, trucking companies from Georgia, Texas, Illinois, Michigan, Florida, Pennsylvania, Oklahoma, and several other states have all ended up in bankruptcy court. Some were owner-operators, some were small fleets. Some had been around longer than many of us have been driving. Take Standard Forwarding Freight out of Georgia. 92 years in business, 14 terminals across the country, more than 200 drivers, more than 300 trucks. Think about that for a minute. A company doesn't survive for 92 years by accident. It survived recessions. It survived fuel crises, regulation changes, economic booms, economic crashes, and then suddenly, boom, it's gone. Companies like that don't wake up one morning and forget how to run a trucking business. Something much bigger happened. Think back to 2021. Dealers couldn't keep trucks on the lot. Used truck prices were through the roof. Everybody believed freight would stay strong for years to come. Carriers were buying equipment because nobody wanted to be left behind. I remember looking at some of those truck prices that dealerships were charging and thinking to myself, there's no way those numbers can hold. People are going to pay those prices. But when freight is booming, people stop thinking about what happens if it ends. They never think about the what ifs. Then the market changed. Freight slowed down, freight rates dropped, truck values collapsed. But one thing never changed. The payment. Due every month, that payment still showed up. The bank didn't care what freight rates were doing. The lease company didn't care what freight rates were doing. The payment was still due each month. Now freight rates are finally starting to improve. That's good news. But if you're still making payments based on 2021 truck prices, that little bump in freight rates that we're experiencing today isn't enough to erase years of financial damage. For some companies, it's simply a little too late. You know, the pressure never stopped. The problem is, the bad news didn't stop when freight rates started to improve. In some ways, it just changed. Take diesel fuel. Remember when diesel prices shot up after the Iran conflict when it first started? We covered that story in detail because it wasn't just about paying more at the pump. It was about what happens when trucking companies are already carrying too much debt. And then one more major expense hits them. Now picture yourself pulling into a fuel island. Yesterday, diesel was $4.10 a gallon. Today it's $5.08 a gallon. Nobody called to warn you. The broker isn't paying you anymore. The customer isn't paying anymore. But your fuel card keeps adding up. Bill keeps getting bigger. Now, somebody always asks the same question. Doesn't the fuel surcharge take care of that? Well, the truth is, eventually, yes. Immediately, no. Most fuel surcharges are based on previous week's national average diesel price. You're buying fuel at today's prices. That means nobody has to cover the difference until the surcharge finally catches up with itself. And if diesel keeps climbing week after week after week, the surcharge is always going to be one step behind. For a financially healthy company, that's frustrating. For a company already buried in debt, it can become a serious cash flow problem. Then there's the issue of insurance. Federal law still requires a minimum of $750,000 in liability coverage. That number hasn't changed since the 1980s. Everything else has. We talked about this in another video because today's lawsuits are nothing like they used to be. One serious crash can lead to a jury verdict awarding tens of millions of dollars. One lawsuit, one judgment, years of work, gone, flushed down the drain. And then comes another problem that doesn't get talked about very often: credit. 20 years ago, if freight happened to slow down, you could walk into your local bank. They knew your business. You were on a first-name basis. They knew your reputation. If you'd been a good customer, they would often work with you until freight picked right back up where it was. Today, many trucking companies never even get that opportunity. Banks have become much more cautious. You really can't blame them. If your balance sheet already shows too much debt, they're far less likely to extend that extra credit. So when cash starts getting tight, there may not be anybody willing to help you out, to give you that helping hand up. That's why higher freight rates have not solved the problem, not in the here and now. The debt is still there. Fuel costs still move without warning. Insurance keeps getting more expensive. Credit is harder to get. Those pressures don't disappear just because freight rates start to improve. In many cases, they're simply waiting their turn. When the phone finally rings, here's the part that doesn't show up on a balance sheet: the people. When a trucking company goes bankrupt, it's not just the owner who pays the price. It's the drivers. It's the dispatchers. It's the mechanics. It's the office staff. It's every family that depends on those paychecks. And the companies getting hit the hardest, many of them aren't the giant national carriers. They're the small-time owner-operators, the family businesses. The guy that owns one truck or two trucks or might have a 5-truck fleet. The regional carriers have been serving the same customers for years. Although we've also seen larger companies go under, nobody is completely immune to bankruptcy. Now picture this. You've been driving for the same company 8 years, 10 years, 15 years. You know your dispatcher by name. You might even go out for a beer now and then. You know your customers. You already know where you're picking up tomorrow morning. As far as you're concerned, it's just another work day. Then your phone rings, or maybe it's a text message. Hey, don't come in tomorrow. The company's shutting down. Whoa, what's that? That's it? No warning, no countdown, no meeting, just a few words. And everything changes. The trucks get parked. The fuel cards stop working. Payroll isn't answering the phone anymore. Drivers are standing around the yard asking each other the same question. What's going on? What happened? Well, the truth is, the bankruptcy didn't just start that morning. It started years earlier. That phone call was simply the day everyone else found out. And that's one of the hardest lessons to learn in trucking. A company can look perfectly normal on the outside while it's quietly running out of time on the inside. The trucks are still moving. The loads are still being delivered. Drivers are still showing up every morning for work. But behind the scenes, the pressure keeps building until eventually there comes a day when there's nowhere left to turn. That's the day everyone remembers. But it wasn't the day the company failed. It was just the day the failure became visible to everyone. Okay, what every driver should take away from this. So, what can we learn from all this? First, don't ever assume today's market will still be here and the same tomorrow. If trucking has taught us anything, it's that this industry, the trucking industry, moves in cycles. The good times don't last forever, but neither do the bad times. The companies that survive are usually the ones that prepare for both. Second, build yourself a financial cushion whenever you can. Whether you're a company driver or an owner-operator, unexpected expenses have a way of creeping up and showing up when you least expect them. Having even a little money set aside can make a world of difference between a setback and a crisis. Third, pay attention to the warning signs, late paychecks, repairs that keep getting put off, drivers leaving faster than they're being hired, vendors complaining they haven't been paid, questions that management suddenly doesn't want to answer. Those signs usually appear long before the bankruptcy filing does. I've spent 33 years in the trucking industry. I've driven the roads, I've dispatched the drivers, I've brokered the freight. I understand it from all sides. There was one thing all those years at every level taught me. It's this. Trucking companies rarely fail because of one bad month. Most fail because small problems are ignored and they accumulate until they become almost impossible to fix. That's really what today's story is about. Freight rates are finally improving, and that's the good news. But better freight rates can't erase years of debt. They can't undo expensive truck purchases made during the boom. They can't make insurance cheaper overnight. And they can't repair cash flow problems that's already been stretched to the breaking point. That's why we're still seeing bankruptcies. So now I'd like to hear from you, the driver, the average Joe. Have you ever worked for a trucking company that suddenly shut its doors? Did you see the warning signs coming? Or did that phone call catch you and everybody else completely by surprise? Share your story down below in the comments. Let me hear about it. I read every one of them, and your experience might help another driver recognize the warning signs before it's too late. I'm Jim Campbell. Keep the shiny side up.